Welcome to today's morning report on Friday the 11th of December with me, Rich Perry, market analyst at Hantec Markets. The European session has got off again to a negative start. We've seen the continued slide in the oil price that continues to fall away, and that is having an impact across the board really on sentiment. Volatility is rising. That's generally seen as a negative for markets. Here we go with the oil price continues to remain below that 37.75 old key floor of August. Now there's a big resistance, I think, between 37.75 and 39 figure. A couple of key levels that there have been broken now. So reaction rallies are seen now as a chance to sell, and that continues to sort of dog these markets. And what this is showing, sorry, I should have kept that up, is this continued moves that we're seeing on the markets where sort of the stock markets are thrown around by the oil price, but also the dollar is being pretty much thrown around, I think, by positioning in front of the Fed. There's no real change that you've seen on the Treasury yields in recent days. Really, the 10 years fairly well flat. It's a bit choppy intraday, but fairly well flat, as is the 2-year. And I think that is pretty much throwing the dollar around. There's not really any decisive moves on this dollar. Now, at the moment, we saw the euro sharply lower again yesterday, but then rebounded again today. So these markets aren't really sure exactly how to position, I think, ahead of this the Fed meeting. There's an element of risk off, I think you'd certainly take from the equity markets anyway. But in front of the Fed next week, I think the markets are going to be pretty choppy, and I think this is going to continue. So what have we got to look forward to today? Well, we've got the retail sales for the States. Retail sales in the States on the adjusted numbers, the ex autos. It's expected to come in at plus 0.3. Now, retail sales on the month-on-month data, that is, retail sales has missed estimates on every month this year apart from June. So that doesn't bode especially well for the data, certainly at 1:30. You could see a bit of profit taking on any sort of long dollar positions there. And then at 3 o'clock, we've got the Michigan sentiment. Now, that's expected to come in at 92. This is from the preliminary data last month. So 93 got then revised down to 91.3. So 92 out for the prelim this time around would be slightly better than last month, but still there seems to be a bit of a slide going on still in this consumer sentiment for Michigan, University of Michigan. So that could well have an impact this afternoon. These retail sales generally do have an impact on the dollar, so watch out for that at 1:30. But my chart today, interestingly, is the Spanish IBEX, because I talked about the DAX yesterday. And I looked through the Eurozone equity markets and found that the Spanish IBEX, because not one I usually follow, but the Spanish IBEX has completed a pretty much a perfect head and shoulders top. Now, that actually gives us a downside target of 9,360, which is pretty much a retest of these September lows. And you've seen this move now confirmed on the consistent closing levels below that neckline resistance. You've seen the move momentum indicators, the RSI confirming the breakdown as well, and that RSI consistent downside pressure now on the MACD lines and the stochastics, pretty much negative across the board. You've seen all these moving averages converge to turn down, I think, also negative. So that's pretty much bearish across the board on these indicators for the IBEX. And here we see the hourly chart. You can see the pressure to the downside, negative configuration across the hourly RSI throughout the last week, and the hourly MACD lines as well. Rallies are being sold into, so you'd be looking at, again, any sort of rebound as a chance to sell. That's the neckline there at, well, it's around about that 10,000 level, isn't it? So you'd see that any sort of technical rally within on a intraday basis is a chance to sell. The main one, obviously, resistance comes in at 9931, but pretty much yesterday's sort of rebound high was a 9814. So again, it looks like the pressure on the support at 9713 is being seen. Subsequently, if you see a breakdown below that, you're going to be moving back towards the next key support at 9428. but subsequently it looks like it's going to probably fall towards that target. So equities remain under pressure in the Eurozone ever since that move from the ECB last week. So that seems to be still the technical analysis that equity markets in the Eurozone remain very negative. So I wish you good luck in your trading today, and I'll speak to you later.